So yesterday, we were supposed to start on this August 2023. Question number 5. August 2023, question 5. We started partially, then how I can misbehave, then we left there. So question 5. Yes, so we are there. I think we can start afresh. It says the following trial balance relates to BD Limited as at 31st December 2022. So as you can see there, additional information. During the year ended 31st December 2023, BD Limited disposed of an item of land for cash proceeds of shillings 20 million, which was credited to the revenue account. No other accounting entries were made. The plant had a cost of 39,700 and accumulated depreciation of 15,860. Any gain or loss on disposal of plant should be included with the cost of sales. It is the company's policy to provide full year's depreciation in the year of assets purchase and none in the year of disposal. So in that note, we said that we can, as we move, we can be doing those workings to avoid unnecessary workings ahead. So working 1, revenue. So revenue reported revenue 1123 500 U less sale of plant. When you sell an asset, you don't recognize that one as revenue. Sale in accounting is sale of goods. So we less the sale of plant 20. They are captured here 20. So we subtract. So this one comes to 500 3011. That should be the correct value for revenue. This one we have done up to somewhere there yesterday. Then, so this one was 1,1. So 1,2. There was loss on disposal. There was loss on disposal. So proceeds on disposal. Proceeds on disposal. They sold that asset for 20. When the net book value, NBV, net book value, we took, I'm moving fast up to this stage because we are covered there. We took 39,700 minus 15,860. So what was the difference? 39 minus 15,860 was coming to how much? It was coming to how much, somebody? 23,840. 23,840. So that is how we realized that we had lost 38.40. And examiner said this one goes to cost of sales. Goes to cost of sales. So I want us to go to working number 2. Let's go to working 2. For working 2, I want us to have cost of sales, selling and distribution, and administrative. So just write here allocation, expense allocation. So expense allocation. So expense allocation, I want you to write for me here cost of sales, admin, distribution. There, like that. Let's have those 3. We can do them at once. So reported, you will say reported in the trial balance. Reported. So reported, check. I can see distribution and administrative. Distribution is 44,000. Please check. While administrative is 93,500. Check in with me. Cost of sales, we can't see it. But in the event you are not given cost of sales, you take the opening stock plus purchases minus closing inventory. So opening inventory, if you check trial balance, you will see 138. Then you add purchases, 667,667 minus closing inventory. Check note number 5, additional information number 5. Additional information number 5. Inventory count on 31st December revealed the value of inventory at a cost of 85,000. So 85. Closing inventory is 35. So cost of sales will be the opening stock plus purchases minus the closing stock. So can you give me that value of cost of sales? Then now we can do the adjustments. So people are getting 72, 720. Olympia, 720, thank you. Then now, there are some items, remember in published, you compress them. There are some items they want us to compress. So one, they have said this loss on disposal, we take it there. So you say loss on disposal, they want it to be part of cost of sales, 3840, like that. So let's go to note number 2, additional information number 2. Depreciation on PPE is to be provided and allocated as follows. So right for me here, depreciation. Depreciation. 1, buildings. So buildings, 2.5% on straight line. Straight line means you charge on cost. Straight line means you charge on cost. So the cost of building, check building is the first item in the trial balance. Property 600, but building is 4, meaning the other balance is for land. So building is 400. 400 million, we are working in thousands. 400,000. So how much do you get? 2.5% of 400. $1,100,000. Joshua tumia commas, inanisumbua count the number of zeros. 400, that is 400, that is 100,000. So this is 100. No, use the 100, it should be 10,000. Joshua? Fanya vizuri. Somebody to there. That is 10. Miriam, I want you to do this. Mkiandika mwandike kama 10 hivi. Unajua mimi kucount the zeros kwa macho ya computer inakuwa ngumu. So that is 10. They have said we take it to administrative. Sorry. It should go to administrative. That is what they are saying. To administrative. Francisca, it is 1 or 10. It is 10. 400,000 times 2.5%. So 2.5 times 400 divided by 100. 10,000. The next, plant. Plant, 10%. They want it on reducing balance. They want it on reducing. Reducing means on net book value. So you take the initial cost of plant, you subtract accumulated depreciation. You reduce first is when you charge. So plant at cost, you will see to 80 somewhere, minus accumulated depreciation on plant, I'm seeing 1,11160. Like that. Somewhere in the trial balance, don't copy, make sure we honor. Cost of plant is 280, minus accumulated depreciation on plant is 1,11160. You subtract, then you charge 10%. Can you do that? So people are getting 16,884. 16,884. They are saying we take it to cost of sales. 16,884. 16,884. They have said we take it to cost of sales. Next, motor vehicle, 20% straight line distribution. So motor vehicle, straight line is on cost, so 20% times motor vehicle was 70. So 20% of 70, is that 14,000? Distribution. Check to confirm. Then again, depreciation office equipment. So equipment, straight line 12.5%. Straight line is on cost. So cost of office equipment 40. So what is 12.5% of 40? (12.5% of 40). Linda, 5,000. They have said we take it to admin. So 5,000. They have said we take it to administrative. So let's not add, we are done with the depreciation. Maybe there are some expenses down there. We should be classified. We should be classified. So let's go to note number, that was note 2. Let's go to note 3. It has been discovered that a former financial controller of BD Limited engaged in fraudulent financial reporting. Shillings 12 million of trade receivables are non-existent and need to be written off. Of this amount, 7 million relates to the year ended 31st December 2022, with the balancing relating to prior periods. So, financial controller of the company amefanya vitu ya stahili, vitu mbaya mbaya. So hizo vitu zake mbaya mbaya, anajifanya hizi madeni ziko kubwa, hakuna deni alinachukua, alitembea na gari na akamwambia mimi ni mkubwa kwenye hizo pesa. So akachukua pesa kwa clients. So but in the books, I write off those debts. So the debt is totaling to 12 million. Of the 12 million, 7 million is the one for this year. The remaining 5 is for prior. Prior is years before. The years before this year. That is 5. So the bad debts which were not written off in the prior year, you don't bring them this year. You will adjust them against the retained earnings brought forward to this year. So for this year, that one you take to administrative. It's an administrative expense. So you come here and say, bad debts written off. You take it to administrative. Unashuku sana amekula. Then the balance of 5, because total was 12, the balance of 5, you will subtract against the retained earnings. That one will come later. Retained earnings brought forward. You know the profit from last year, you will subtract it there. We only concentrate with the one for this year. Alright. We are going to number 4. The existing debit balance on the current tax in the mambo ya tax ngoja kidogo. So I want to finish with this. Number 5, inventory tulishamalizana. Number 6, on 30th December 2022, the company director invited the current shareholders to subscribe for a rights issue on the basis, mambo ya rights issue, mambo ya shares will not affect this trade. Shares will affect statement of changes in inventory. Then we are done. We are done with the allocation of those 3. Maybe if there is something on the trial balance which can affect those expenses, which so what to do for me? Add for me the 3. Just add for me the 3. Add for me the 3. You just give me those 3 figures. I will know they are following each other in that sequence. Someone to confirm Olive's answers? Just one confirmation will be enough. Olive, hiyo cost of sales, hiyo hata kama sijafanya itakuwa wrong. 720 plus 16 peke yake ni 736 plus 3,000. Yes, pick up either 740 something. That figure for your cost of sales are not added, but it can't be right. Yeah, so if you see it's 740 something there, just check. So I will adopt your figures. So 740, 724, 115, 500, 58,000. Who has a question up to where we have reached? If no question, I'll be moving forward. Anybody with a concern? Anyone of us with a concern? If there is no big Mary, what if there is gain on sale of property? So in our, if there is a gain, so the gain will reduce the expense. So I would have subtracted. It will reduce the expense. So utilize it to reduce that expense. So I hope many of you have understood that. Now, good. Let's check the next one. The next one, should we check? Yes. I want us to check income tax. I want us to check income tax. So income tax, call it working 3. Call it working 3, the income tax. Call working 3 income tax. Income tax. So income tax, let's read note number, it was note number, which one? 4. The existing debit balance on the current tax and the trial balance represent the under/over provision for previous year's tax. A provision for current tax for the year ended 31st December 2022 of 52,000 is required, together with a decrease to the deferred tax provision of 3,000. So current tax, for this year, they require 52. Then decrease in provision. Decrease in provision for deferred tax. Deferred tax has gone down. They are saying decrease in provision for deferred tax is 3,000. So decrease, you subtract. When there is a decrease in provision, you less. That one you subtract. Then in the trial balance, they are saying there is a current tax in the trial balance, which I can see it is current tax is 2,600. So they are saying it is under or over. You know, over provision means it should be a tax income, which you used to reduce. But it being on the debit, it means it's an expense. So it was under provision. Tax under provision is still an expense. So tax, you earn. This one you earn tax under provision. For last year, that is 2,600. For it to be on the debit side, it means it's an expense. If it was a credit tax, you subtract. If it was on the credit side, that one you less. But this one here, you add because it is still an expense. So our object is student whether it is under or over. But when it appears on the debit, that is under provision, which is still an expense to be paid. Over provision will be on the credit side, which is a credit tax balance. So this is the total tax expense. Can you add? Add for me the total tax expense. The total tax expense. $51,600. Thank you. There's just no, nothing much. That is okay. We are done. Let's answer the question. Let us answer the question. I hope I've captured everything perfectly to avoid stress head. Because sometimes it can kusumbua sana. Note 1 is perfectly done. Tumetoa huko pata again. So that is captured. Depreciation is well captured. Bad debts written off, your data. The inventory we have captured. That's done. We are okay. I've not seen any problem. So let's do presentation. First, required Roman 1, statement of profit or loss for the year ended at 1st December 2022. So right there, BD Limited, statement of profit, stock loss. Statement of profit, stock loss for the year ended 31st December 2022, like that. One column, shillings in thousands. So how that one column? Revenue. So you start with revenue. So revenue, working 1. So working 1 revenue we got 103,500. You follow it with cost of sales. Don't even tell us less. We know we are subtracting. That is working 2, 740, 724. Gross profit, the difference is gross profit. How much will our gross profit be? How much is our gross profit? So people are getting 362,776. 362,776. Follow it with the distribution. I hope there is any other income. Wait, if there is any other income, I add before. No, put other income. So distribution, working 2. We got 58. Administrative, admin, working 2. We got 115,500. So what you get is called profit before tax. profit before interest and tax. That is operating profits. So give me the profit before interest and tax. How much? Thank you. Olive, 189,786. 189,726. 276. 276. 276. I bring interest. Interest here we call it finance cost. Finance cost. So check the finance cost. So let's check interest. Interest in the question paper. I saw interest in the trial balance. I'm seeing 24. I hope you're seeing the same. 2400. I'm seeing 2400. Therefore, profit before tax will be how much? $186. 876. Income tax, working free, 51,600. So profit after tax, it ends there. Profit after tax is how much? So profit have been given 135. 135, 276. So there, the students were required to get any 3 ticks for 6 months. Any 3. So here, any 3 is going to talk about. This one, the pattern. So you know your set of plan. And even this one, where is finance cost? This one here. Distribution was not bad. Distribution was not that bad. So the 6 marks was to come from those ones there. 3 times 2. Those are the ones which were moving. Let's go to required Roman 2. So required Roman 2, they want the statement of changes in equity. Yeah. So right there, Roman 2, BD, limited, statement of changes in equity. Statement of changes in equity for the year ended 31st December 2022. So the statement of changes in equity, I think in the question, what I think ordinary share capital was there. Ordinary share capital. I don't know the share premium. Share premium ilikuwa yes. So share premium, retained earnings, then total. So you will start with the balance brought down. So balance brought down, that is 1st January 2022. So ordinary share capital, I'm seeing 200. I'm seeing 50 for premium. I'm seeing 223, 640 for retained earnings. Can you add for me the total? Kindly. Total you get? You get 473, 640. Then there was prior year adjustment. There's a total of debt of 12. 7 was for this year, 5 last year. So 5 last year means this profit brought down is wrong. So you less, no, not you less, sorry. Just say prior year adjustments. Prior year adjustments. So we adjust it to the profit account, the 5. The 5. So maybe you can say the bad debt. This is the bad debts. Bad debts written off. They never wrote it off last year. So it means the profit brought down was wrong. So you adjust. Then there were some notes on ordinary share capital. But before that, in the trial balance, there was interim dividends paid. So dividends paid reduces profits. Interim dividends paid, that one reduces profits. Then there is profit for the year. Profits for the year. For the year, you take to return earnings. You have gotten 135 to 76. Check your P&L. From our P&L, that is the profit we have gotten. Okay. Then there was note number 6. Check note 6. On 30th December 2022, the company directors invited the current shareholders to subscribe for a rights issue on the basis of 1 new share for every 5 held at an exercise price of 15. The right price on the last day of quotation was shillings 20. Hizo mambo ya rights haiwezi kusaidia anywhere. What you do is simple. Just do a small working somewhere outside. You say right issue. They issued 1 for every 5. Or 1 for every 5 held. How many ordinary shares were being held? This one is here. 200,000, but 200,000 is monetary value. So divide by the par value. Par value was 10. So you take 200, divide by 10. So how many shares did they give through the rights issue? How many shares did they give through the rights issue? So they gave 4,000. 4,000. So this 4,000 to ordinary share capital, you will take 4,000 times the par value, which is 10. 40. Then to share premium, they gave those shares at shillings 15. So premium is the 5 shillings. So you take 4,000 times shillings 5, which comes to 20. They gave them at shillings 15. In the ordinary share capital, you can't post more than the par value. So the surplus of 5 goes to the share premium. So you will go to your schedule, then you say rights issue Here you will put 40. Here you will put 20. Then total is 60. Yeah. There is nothing remaining. So just give me the balance as carried down. The balance carried down. So balance carried down. This is 60. No, this is 240. This is 70. So you people give me return earnings and the one for totals. Thank you. So we have that 343,916. And we have 653,916. How many marks were this? So those are 4 marks. Any four at one. So the 4 are here. 1, 2, 3, 4, 5, 6, 7, 8. So any 4 at one. Utatokaje bure? How? How possible is that? Any question? If no question, I want us to go to the balance sheet, but before we go to the balance sheet, the items of PP must be compressed together. Land, building, meaning you are not supposed to show them there one by one. So right for me there, working, I think that is working for. Working for property, plant, and equipment. So working for property, plant, and equipment. So property, so I want first of all to bring them at cost. Unachukua cost minus accumulated depreciation, then depreciation for the year. That's how I want us to do them. So, let me see. Let me see. Yes. So we have property, land, motor vehicles, and equipments. Then total. Like that. It's just a small working. It's just a small working there. So cost 600, land 280, motor vehicle 70, 40. How much is the total cost for the four of them? Total cost, you add a cost. It is 990. Someone to confirm. 990 because 600 plus 8 is 880. 880 plus 110. 990. Check. Confirm for me that. Yes. So this is 990. Then accumulated depreciation. So less accumulated depreciation. 80. 341. 160. 42. 15. When you add the total, 80 plus that, plus that, plus that, the total will be how much? So 248, 160. Then the precision for the year, I forgotten about those figures. So I pick them from working two. So let's leave for the year working two. So give me that order. Property is the one we put for buildings. So give me 1, 2, 3, 4 of them. I will know they are flowing like that. So give me the 3 of them, the 4 of them. So Linda, 10. Start adding the 4, 16, 18, 4. 14 and 5. So total across will be how much? Total, if you are Linda, 45, 884. 45, 884. Correct. So the total net book value, I will not be interested on the individual because at the end they will come. I just need this total. Total NBV. So take 990 minus 248 minus 45,884. Can you give me the total? The total is what I want. $695, $695, $695, $956. Okay. So right there, BB limited for Roman 3 of the question. So we kick off. Non-current assets. PP. Working number 4. Then current assets, inventory. Inventory, we check the closing. Closing inventory was in note number, certain note there. That was captured in note number 5, 85,000. Check note 5, 85,000. Receivables. Receivables. Trade receivables 74,500. So 74,500 minus that bad debt of 12. The bad debt of 12, you remember the 12, which the finance control, I don't know if what. That one will be how much? Minus 12 is 2, 6. 62,500. Then there was bank balance, but the bank balance is appearing on the credit side. If you check it keenly, check that keenly, it is on the credit side, so we can't bring it here. So this one will be 114. 147,500. So add the total assets. How much is the total assets? Total assets 843. 843. 843, 456. Equity and liabilities. You proceed down there. Equity and liabilities. Equity and liabilities. So just pick them. Check the statement of changes in equity, the way they are appearing there. So ordinary share capital, total is 240. Share premium, 70. Retained earnings, 343. 916. Total 653. 916. We already have them here, so I'm just picking from the statement of changes in equity. So have that. I hope you're done. So non-current liabilities, there was deferred tax. Deferred tax. So check deferred tax in the trial balance. Though there was a decrease, so the decrease will subtract. Deferred tax, if you check, deferred tax, if you check, you'll see 32,400. 32. 400 minus the decrease. There was decrease in the VAT tax captured in note number number 3, that there was not 3. In note 4, there was a decrease in the VAT tax of 3,000. So minus 3,000. That should be 29,400. That is 29,400. Then current liabilities, we check current trade payables. Trade payables. Trade payables in the trial balance, there was no adjustment, 68,800. Then there was bank balance, which is overdraft. So bank overdraft, it is appearing on the credits. So that's why it is an overdraft. So that is 15,500. Current tax, that is a liability. Current tax for the year, as mentioned in note number 4, current tax 52. You see 52 somewhere there. So can you add for me those 3? Those are the only liabilities we have. Please add and tell me how much. So current liabilities, 695, 956, 956. So it is balancing. Later, the figure you are giving, 843, 456. So it is balancing. I hope that is the current figure. It is balancing with total assets. Kama hiyo ilikuwa figure ya kitambo, sio inakaa ya PPE Linda, the figure you have given me. Hey, please, what is the total of these 3? That is the figure 6. What is the total of the 3? What do you mean? This plus this plus this. Hey, I'm alone here. Familiar? 136, 300. So if you add the 3, it is balancing. Income tax, we did not adjust. We just took the income tax at the current plus increase, the decrease. There was no, the current tax for the year remains. You're sure that one you can't alter? When you add the total equity and liabilities, what do you get? It comes to how much? There's a variation we can check out. $819,616. Right? That variation is quite big. What have we not captured? That is almost 20,000. That is comes to a variation of how much? Maybe there's something I've left, which we can capture very fast. Is a variation of how much? $23,840. 23,840. What was the 23,840 all about? Is there something for 23,840 we have not captured? That figure seems familiar. I believe this one was okay. This addition of total assets. Kuna mali niliona mulienda slow sana. I don't know what happened. Can you confirm for me if this figure equals sawa? That one there. Net book value, Claudia, net book value of disposal. And that is the, oh yeah, I agree with you. Yeah, that is true. For PP, there was plant which was disposed. Yeah, but I suspected the problem is here. There is plant which was disposed. There was disposal of plants. Yeah, plant was disposed. So you need to less. So go and adjust here. Less disposal. We disposed plants. The book value of the plant we disposed was 23,840. So that is I think where we are getting it from. So this is 23,840. So from PP, we need to subtract. So the 695,956 subtract the 23,840. There was disposal of plants. So you have to remove it. You less the disposal. Can you subtract and tell me instead of 695, what value should we have? That is the only item we have omitted. What should we have? We are supposed to have 672,116. 672,116 plus 147. Total will be how much? First of all, this other one, you told me 819,616. How about this one? 819,616. Yeah, so that is the where the mistake was. 819,616. Thank you. So that one was to give you 10 marks. You required 5 ticks. You required 5 ticks. So this one was okay. 1. That was okay. 1, 2, 3. Even this one, 4. Receivable, I don't know why you should not get, and it's just a matter of subtracting the bad debts. So published is just knowing the issue, which are happening there. So no problem. No problem there. No problem, no problem, no problem. So let us go to last meeting part 1, April 2023. I'm giving you 5 minutes break. April 2023. Question 3. April 2023, question 3. So April, question 3. So stretching out kidogo, like 2 minutes. Tusipoteze wakati mwingi. Like 2 minutes. So we are back. We are back. We are back. You will allow me to read. It says, the following trial balance was prepared by Salama. As Ias is capable of seeing ordinary share capital, 8% redeemable preference shares. Redeemable is treated as non-current liability, 6% debentures. Debenture is also liability. Revaluation, reserve, retained earnings, revenue, inventory, purchases, distribution, cost, admin, interest paid on debentures, interim dividends paid, ordinary preference, investment income, leasehold building, plant and equipment, furniture, investment, accumulated depreciation, accounts receivable, bank overdraft, accounts payable, deferred tax, suspense account. The inventory as at 31st December 2022 was valued at 16 million. However, there were some goods which were considered obsolete with a net realizable value of 400 and a cost of 450, with a net replacement value of 350. We go for whichever is lower. The 6% debentures were issued on 1st July 2022. Interest on debenture is payable semi-annually. No problem. That is finance cost. The policy of the company in relation to depreciation of its assets is as follows. Land and buildings, plant, furniture, 424, straight line reducing. The plant and equipment had a residual value of 5%. Depreciation is classified as cost of sales and expense, except for depreciation on furniture and fittings, which is classified as administrative. So all depreciation, we take them to cost of sales, except furniture, which goes to administrative. Taxable timing differences were 24 million, while deductible timing difference was 10.5. You remember the deferred tax. Corporate tax for the year is 21.4, is to be provided for. The suspense account represents two components. One, proceeds from sale of land at 16 million, whose cost was 20 million, and accumulated depreciation of 2.5. Shillings 10 million being a bonus issue of shares. The directors propose to pay a final dividend of 1.5 per share on the outstanding shares at the year end. Tax rate is 30% required. Statement of profit or loss, statement of changes in equity, statement of financial position. So this time round, revenue has not been affected. So our working one is expense allocation. Expense allocation. And the expense allocation, cost of sales, distribution, admin. Have it that way. Hi, you are there? Reported, cost of sales in order to account, we calculate. So reported, this is distribution 22,300, 22,300, then administrative 34,440, 34,440. Cost of sales, COS, let's take opening inventory. Opening inventory, I saw 12,400 plus purchases, 147,200 minus closing inventory. Kuna maneno mingi hapo. Check note one. So good. So closing inventory, they are saying was valued at 16. However, there were some goods which were considered obsolete and with a net realizable value of 400. So the net realizable value, what they can receive on those stock was 400 and a cost was 450. This cost was 450 with a replacement value of 350. So it means the closing stock should be, maybe kukitaka kuandika mahali, closing inventory is going to be the 16,000 minus there is stock inside here. You got a selling price of 400, but if you sell it, you get 400, but there is a cost. It has a cost of 450. It has a cost of 450 and a replacement value of 350. So if you sell it, you will incur cost of 450. If you replace it, you will replace it at 350. So in this case, the 350 will not be necessary. The realizable is 400 and the cost of the stock is 450. So it means when we sell this stock, we are going to lose 50. We are going to lose 50 because 16 is cost. So the cost which is inside 16 is 450. But this 450, if you sell it, you are going to get 400. So generally, the expected loss is 50. So 16 minus that one, what do you get? Because this is the cost which is inside here. But on this cost, if you sell it, you will get 400. It means there is a loss. There is expected loss in the closing stock. Daniel, 15,950. 15,950. So that is the cost in that stock. That is the cost in that stock. Because of the 16, the interpretation of the 16, there is stock. 16 is the cost. Stock is recorded at cost. So inside 16, there is stock with a cost of 450. Out of that, a long process. Useme 16 minus that 450. Then now 450, if you sell it 400, but now that's a waste of time. So the closing stock should be that one, minus 15,950. So give me the correct value of cost of sales. Give me the correct figure for cost of sales. $143,650. 143,650. Thank you. Let's go to the next note. Let us go to the next note. Note number 2. Note number 1, tumeshamalizana. So hiyo watana nayo. Note 2, interest is finance profit for now. Depreciation. All depreciation, we have said they goes to cost of sales, except furniture, which is going to administrative. So leasehold building, so leasehold building, where's the cost? Cost was 56 to 50 by a percentage of 4%. So 4% times that one. How much? 2250. Then plant and equipment. So equipment, 20%. 20%, plant and equipment, 55. What is 20% of 55? 11,000. But the only problem with plants, for plants, I think this one will have an effect. Note number 6, check note 6. The suspense account represents two components. Proceeds from sale of plant of 16 million whose cost was 20. So we need to subtract it. You know, pale wanasema full year is different. So this will be 20%, 55, minus the one we disposed. We disposed equipment plant with a cost of 20. So you will subtract the 20 is when you multiply. This one was disposed. So which are you? You get 7,000. Furniture, 4%. 4% reducing. So you will take 35 minus 96. So take 35 minus 96 multiplied by 4%. The residual value for which note? Daniel, where's the residual value, please? Kindly. Maybe it's a capture. There's a letter shida. It's mentioned where? Residual value, not one, no. Where's the residual value done? Note, which note? Note number 3. The policy of the company in relation to depreciation. Fine. Oh, the plant and equipment had a residual value of 5 million. So, they're just giving us headache for no reason. There was residual value. So you're not supposed to depreciate residual value. So for any equipment in the quarter, so you subtract also residual value. We don't depreciate residual value. 5. So take 55 minus 20 minus 5. Then you multiply by 20. But anyone, so this is residual value. We don't depreciate residual value. So cost minus disposal minus residual value times 20%. What do you get? Or what will it be? Only 6,000. So this is 6,000. Wow. Furniture will be how much? This minus 96 by 4. By 4. What will it be? So that one is going to administrative. That one is going to administrative. Whatever you get, we take to admin. How much? Thank you. 10,160. 1016 or 10,160? Colin? 1016 or 10,160. That figure is quite big. 35,000 and 6, it should be. Here's equal to 1016. It is 1016 or 10,160. That's 5. Oh, yes, but 5 minus 96. $10.16, sure, that's okay. $10.16. So they are saying we take it to admin. All right. Then let's proceed with other notes to check if there is anything. Note number, that is note number 3 gone. 4, taxable unit tax. 5, corporate tax. 5, check note 6. Proceeds from sale of plant of 16 million whose cost was 20 and accumulated depreciation of 2.5. We need to check whether we gained or we lost. So, hebu chukua calculator yako kuniambia whether it's a gain or a loss. We received 16, the cost was 20, so 20 minus 2,500 is how much? 20 minus 2,500. The cost was 20, but accumulated was 25. That comes to 17,500. Then we sold it. We sold it for 16. We sold it for 16 million. We never gained. Hapo tumepoteza. It's a loss. It is a loss on disposal because, so wake up. Loss on disposal. Loss on disposal. We sold it at 16 when the book value was 20 minus accumulated depreciation of that one there, 25. So this is 17.5. Then we sold it at 16. So it was a loss of 1,500. You take it to cost of sale. Director's question. That is all. So can you add for me this? Distribution has not changed. So 22,300. This one has slightly changed. So can you give me the two figures for the cost of sales and administrative? Those two. Help me with the two figures. Totals, please. Totals. Cost of sales is how much? Let me start with cost of sales. Cost of sales will be how much? 153, 400. 153, 400. Admin, 35 something. Administrative, administrative, 35, 416. 35, 416. Wale ukishapanga hizi, wana hii. Hii ndio watumishi swali, hizo zingine ni bado kidogo sana. What I want us to check, working two, one, come up with the deferred tax account. Deferred tax account, like that. And you come up with the deferred tax account. Daniel, what is the issue? Olive, cost of sales, 173. People have different answers. So which is which? Mulipea mzuri, nikachange sasa. So for admin, 35, 456. 456. Olive, cost of sales is how much? Olive is saying it is not 153. That it should be 173 go to Olive. You, sir. Olive, how did you get 173? Because it is 143. Olive, it is 143, 650 plus 2250 plus 6,000 plus 1,500. Where you have a Judah over 20,000 or 19 something. Olive, confirm umeona mistake yako. Olive, you're the one I'm waiting for. Correct, you have seen. Let's go to the deferred tax account. Let's go to the deferred tax account. Deferred tax account, check the second last in the trial balance. So deferred tax balance goes down. Balance goes down. Deferred tax is 5,200. 5,200. Then check note number 4. The taxable timing differences were 24, while the deductible timing differences was 10.5. So deductible is the one you need to reduce. So for the year, you take 30% tax rate. Taxable was 24, while deductible was 10.5. So take taxable minus deductible, then you multiply by 30. Tell me what you are getting. Tell me what you will get. 24,000 minus 10,500. Deductible you're supposed to deduct from taxable. So what do you get? Nimeweka sawa 40-50, but nimeweka on the wrong side. Yes, nimeweka on the wrong side because they are saying this, sorry. It should be this way. That should be our balance, actually. It should be our balance carried down, which is 30, 24 minus 10,500. The 40-50. The 40-50 should be the balance at the end of the year. The timing and taxable should be at the end of the year. So what goes to P&L is the reduction. It has reduced. There is decrease in deferred tax from 52 to 40-50. So P&L, your balancing figure. P&L, your balancing figure there. How much? Yeah, it's on the credit side. I noticed that because they should be at the end of the year, not during. So 1150 decrease. So this is a decrease. It has decreased from 52 to 40-50. So decrease is 1150. What else can make me not to do presentation? Maybe finance costs. Maybe finance costs. This was just what we do. So the last working we can do is the one for finance costs. Finance costs. So finance costs, have it there. Finance costs. Finance costs. So finance cost here will be interest on debentures. So interest on debentures. Debentures, they were charging at 6%. So it is 6% of 10. But the examiner said in note number 2, the debentures were issued on 1st July, but you see we are closing in December. So interest on debentures is paid semi-annually, so a half year. So they were issued in July. July to December is only 6 months. Brian, where are we getting the 10,500 on tax? Brian, read note 4. The deductible. Brian, I'm only talking kidogo. The deductible, check deductible. If you can see 24, you can also see the 10. The 24 was taxable, while this one is deductible. Good. So interest on debentures, they issued in July. So July to December. Hapa hiyo. $300. Then I told you yesterday during the introduction to publish, dividends you are paying to redeemable, that is like finance cost. So dividends to redeemable preference. Dividends to redeemable preference is part of finance cost. So it is 8% of 12,000. What is 12%? 8% of 12? How much do you get? How much do you get? 8% of 12,000? 960. So total finance cost in this question will be 1260. Will be 1260. Ladies and gentlemen, we are ready to go. We are ready to do presentation unless there is someone with a question. So start writing the name there so that we can have P&L. What do you think? Can we just do PPE tumalizane mapema kabisa without again indulging in another working? I think we can do PPE so that we don't come back to any more workings. Tufanye, wacha tumalizie. So I want us to do PPE, property, plant, and equipment. So then you are informed. Tukitoka kwa P&L, tunaweza sukuma haraka haraka. So working for property, plant, and equipment. Property, plant, and equipment. So we had leasehold building. So building, the cost of building was 56 to 50 minus accumulated depreciation, which was 18,000. Minus depreciation you charge on buildings. Buildings, you charge this one here, 2250. We charge 2250. So how much is the net book value for buildings? What do you get? 36,000. Equipment tulipokuwa akili inaweza kupeleka mbio mbio. Equipment, you have to be keen. Equipment, the cost was 55. Then we disposed of 20. So that means tunakumbuka hiyo disposal ilikuwa tunasahau za vile. So you need to subtract this 20. Ama hiyo kupeleka safari ya mbali. I know what to do. Yes, I know what to do. Usikumbuke na hiyo 20. When you got 55 minus accumulated depreciation on equipment. Equipment, the accumulated depreciation was 12,800 minus Depreciation for the year, equipment we charge 6,000. This one here. So we are charged 6. I want to bring all of them, then we subtract. From the general, we subtract disposal. Yeah, then Marisa, if we furnish up a jacket, we take 5 minutes prayers, then do the presentation. It will be good for us. So 55 minus this. We finish that, then we do the prayers. We come back for presentation to finish up that. Just give me that figure. Then disposal, we will bring it as one figure. 36,200. Then at furniture, the cost was 35. Accumulated depreciation on furniture. Accumulated depreciation was 96. Then depreciation on furniture, we got 1016. This one here. We got 1016. How much? That is 24,384. Then before we add less, the one we had forgotten in the other question, net book value on disposal. It was 20, but it had accumulated depreciation of 25%. It had accumulated depreciation of that, which leaves us with 17,500. It leaves us with 17,500. So can you add the total? This one you subtract. Here we show the total. So can you give me the total? Then we go for the prayers. Add the 3, subtract 17,500. Olivia is equal 67. Olivia, sasa zingine unanienjoy. Kama 36 plus 36 peke yake ni 72. Hata kama zitafika. Hiyo peke yake ingefika 72,000. Na sijaweka 24. So 79 can be somewhat better. 79,084. 79,084. Olivia, leo yote umeshinda ukinienjoy. Sijui kwa nini ama stima jana ilikufungua. 79,084. So I want us to take a break. It is 4:21. Let's come back at 4:26 for presentation. Thank you. So we are back. Let's go for presentation. Marianne, confirm you are back so that we go for presentation. So we go to Salama presentation, Roman 1, part A. Salama Limited, statement of profits to loss. For the year ended 31st December 2022. All right, so revenue, there was no effect. 780. 780 is enough. Or 789. Revenue is 283 or 60. Then cost of sales, working 153, 400. So how much is the gross profit? Gross profit will be 130,060. Confirm. From that. I hope that is okay. Then there was other income, which is investment. There was investment income. Investment income is 1,500. Then there is distribution, working 22,300. Then there is admin, working 33,456. No, 35,456. Yes. So profit before interest and tax will be how much? Can you adjust for me that? So how much? 73,804. 73,804. Finance cost, working 1260. So profit before tax How much is the profit before tax? That minus that. Profit before tax will be how much? Profit before tax. How much will that be? 72,544. 72,544. Income tax. Income tax one, there was current tax and there was deferred tax. So current tax, we bring the two of them. We are going to bring the two of them. So check note number 5. Check note 5. The corporate tax of 21.4 million is to be provided for. So this is here 21,400. Before tax, there was a decrease. Decrease will reduce the total tax. So use the decrease in deferred tax to reduce the current. As you can see in the deferred tax account, this one, there was a decrease from 52 to 40.50. When tax decreases, that is tax income. So utilize this one to reduce the current tax. So how much do you get? 21,400 minus 1150. You have stopped thinking. That one comes to how much? That is 20 to 50. So that is the tax expense. So profit after tax, we are done. Profit after tax will be how much? How much is the PAT? 52 to 94. 52 to 94. We are done. You successfully get your 8 marks. So the 4 things were to come from here. 1, investment, distribution, there was no adjustments to that effect. So that was easy. Then this one was the part without struggling. Otherwise, we're supposed to get all of that. I want us to go to the statement of changes in equity. I want us to go to the statement of changes in equity. I hope you are done. So have the statement of changes in equity. I'm seeing ordinary share capital, revaluation, retained earnings, where we are making full, then totals. So how that? I hope people are ready. So balance brought down. Ordinary, the first item, 20. Revaluation, 34. Retained earnings. Retained earnings thing up 14, 160. Can you add across and tell me the total? $37,560. Then there was bonus. Bonus issue. Check note number 6. Shillings 10 million being bonus shares. Shillings 10 million being your bonus. Well, it's financed from where? Because you see, bonus must be financed either from revaluation or it must be financed from profits. So if they don't say, we just post it to the end. That was very bad. It's normally financed from either there, but they never stayed. Then there was no revaluation. Profit for the year. Profit for the year. Check P&L. P&L, we have gotten a profit of 52,294. Then there was dividends. There was dividends. Note number 7. But remember, the dividends you're bringing here are the dividends paid ordinary. Only ordinary, not preference. Ordinary. So, note 7, they are saying the directors are proposed to pay a final dividend of 1.5. Currently, we are told if we propose, you have not paid. You have not paid. You just have intention. You just have intention to make the payment. So check trial balance. There is interim dividends paid, ordinary 2,000. So it reduces profit. I will only subtract that one. In the current standard, we are told what you have proposed, you have not paid. Therefore, you should not bring it to the retained profits. Wisha. So give me the balances carried down. So balance carried down, 30, 34. Give me the last two. Help me with the last two. $37. Huh? Please give me the figures. The two of them. $64,454. $64,454. Then 97,854. Like that. Interim dividends. Yes, done. How about them? How about interim dividends done? Bring me to speed. Interim dividends, interim, they say ordinary, interim ordinary, and interim preference. Those preference, we don't bring them here. This one. We don't bring the one for preference. We only capture ordinary. The other one was proposed. In the revised standard, IS number 1, proposed dividends should not be subtracted against the retained earnings. We only subtract the retained earnings. Actually, that's the I think last year, not this year. So proposed dividends we don't capture. They have said proposed dividends should be provided as a disclosure. We should not recognize proposed dividends we don't recognize until it is paid. So currently, we provide disclosure. Disclosure means we just explain to the users of financial statements. You don't capture them in the financial statement. That's why I've left the ones which have been proposed. Interim, you only capture ordinary, not pre-engineering. All right, let's go to the balance sheets. I hope you are done. So let's go to the statement of financial position. Dividend, CDO 3,000. If you take 20,000, ordinary was 20. If you take 2,000 of ordinary, 2,000 times 1.5. They are proposed 1.5. So that is 3,000. 2,000 times 1.5. You know, 3 is the one coming to 3,000. So to Kimaliza, I'll tell you what I'm saying. What I'm going to do. You will provide it as a disclosure, not to be recognized. We don't recognize. Those are the current new issues in financial reporting. Proposed dividends is not recognized until it is paid. Because people propose, unafikiria kupropose ni kitu ngumu. Si ngumu. Kwani hata sisi hapa shule tumepropose dividend for how many years? Na sijaiona ikilipwa. We intend to. Inakuwa tu hiyo, we intend to. But haikuji. So we don't need to bring them in the books until they are paid. So we provide them as disclosure to the books. I'm going to show you how disclosure is done. So let's go to C. So non-current assets. Non-current assets. PP. Working for. 79,084. There was investment. Investment, I saw it somewhere, it's been in the order, but I saw investment somewhere. After furniture, there was investment of 34,500. Those two, there is no any other non-current. Can you add the two? Add the two. That only gives you how much? 113,584. Then current assets, inventory. Inventory, it was 16 minus the loss of 50, so it came to 15,950. I hope you can recall. We took 16,000 minus the expected loss of 50. So it came to 15,950. Receivables, there was no balance in this question. So you bring them the way they are, 35,700. Then there is no bank, there is nothing. So add these two. 15 plus 35 will give us how much? $51. 660 or 650. It should be 50 mwisho. So that is 51,650. 51,650. So total assets. Total assets will be how much? Total assets. $165, $324, $165, $324. Equity and liabilities. So pick them from the statement of changes in equity. So ordinary share capital, 30,000. Revaluation. So revaluation, 3,400. Retained earnings, 64,454. Total 97,854. Capture that. We proceed. Total asset, hiyo tulimaliza huko. So tuko kwa equity and liabilities hapo. Non-current liabilities, deferred tax. Deferred tax, take this one. This closing, 40/50. Balance sheet, you take the closing. So 40, 50, 6% debentures. 6% debentures. Check the value of that loan. It was 12. No, it was 10. 6% debentures was 10. Then current liabilities, payables. Payables. So payables was accounts payable 17,770. Bank overdraft. Bank OD hapo juu yake 1680. Current tax. Note number 5, 21,400. Pick up. Oh, we have not captured this item, the 8% redeemable preference. In a 5-year non-current, 8% preference, 8% preference, the redeemable, the 12. It should come as part of non-current liabilities. I'm just trying to check what maybe we have omitted. I'm just trying to check if there is anything we have omitted. If no, we just have to finish it. Can you add? Maybe the difference we can have is in turning dividends for preference, the 480. Or if is that the one you are saying? Maybe the 480. What do you get when you add this? When you add the total equity and liabilities, what does it come to? 12,480 the mingi. Have you added the 12, the 8%? Olivia, have you added the 8% preference, the 12? Have you adjusted the 12? Have you adjusted the 12? Have you added the 12? How much is the total? This from 97 up to here. What you should be having, I think, is 480, which I can be able to explain by adjusting them. Linda, 164, 750. The difference is 480, correct? You see, these people were paying ordinary, and also they were paying preference. Preference, our third parties, see when you company, redeemable, see when you company, they are not owners of the company. So when we are calculating finance costs, check where we calculated our finance cost. Check where we calculated finance cost. Here, finance cost, we took interest on debentures, 300. And if you check trial balance, can you check trial balance? You will see interest paid. Can you check somewhere? Interest paid on debentures. And tell me how much you are seeing. The interest paid on debentures. How much are you seeing? Interest paid on debentures in the trial balance. How much are you seeing? You are seeing 300 Ryan. So it means the whole amount was paid. So there is no liability. But dividends to redeemable preference, total was 960. But if you check trial balance, how much was paid? Out of 960, how much has been paid? How much are you seeing in the trial balance for preference dividends? How much are you seeing in the T balance? The interim, there was interim dividends paid on preference. You are seeing 480. So they paid 480 instead of 960. So there is accrued part. So you come here and say accrued preference dividends, 960 minus 480. That one comes to 480. So it is balancing. Total equity and liabilities, will it be 165,324? Well, now you add. Are you okay now? You're sure? It is now okay? Brian, Daniel, Francisca? It is now okay, Olivia, Mary? Are we now good? Mmechoka, ama? Well, now you add. You know, before it was the difference up there. You're sure now it is okay? Okay, what value? 165, 324. Olivia, did you rectify yours? The 12, did you capture the preference of 12? You had omitted it initially. Yes, so that is good. So, what published is very funny. Hata ukifanya maswali 30, but you don't understand the concept behind it, here who compile admin distribution, blah, blah, hivyo pamoja. If you don't know how it operates, but if you know, any question is approachable. So what I'm going to do, I'm going to check my old videos, come solution, nitatumia video moja, na solution yake. But the ones with maybe a different question here are done in the previous classes. Before that, Daniel, the 300, initially, before the adjustment, actually standard in Nigeria, they adjusted in July this year. They only adjusted one thing. They said, well, for ordinary, when you propose ordinary dividends, you don't capture them in the books. You give a disclosure. So disclosure means after you are done with the books, you disclose outside here that the management have proposed to pay dividends of this much come next year. So you don't bring it in the books until it is paid. But not our kama preference, these are third parties, lazima walipwe. But for ordinary, kama pesa hakuna hawatalipwa. Unless they have been paid, that is when we are sure. If they are not paid, then you provide the disclosure. That is the only adjustment. So Daniel, I hope you have understood that. Yeah, good. So that is it. That is it. That is it. That is it. So there is no issue. So I will share one. So come tomorrow. Tomorrow we have our normal class at 6:15. But because it is a holiday, I don't think 6:15 will be quite practical with me. Let's start the class at 7. Yeah, this one I will share. January report. Yeah, this one for today is okay. So let's start class tomorrow at 7 a.m. in the morning. Remember, tomorrow we plan to meet twice. So when we meet tomorrow, we are starting a new topic. Let me check our guideline. We are moving with the guideline. I think we are ready to cash flow. So IS number 7, cash flow. So the next question, the third one, I'm sending you recording plus the solution and Ias. So topic IAS 7, statement of cash flow. Statement of cash flow. So that is for tomorrow. So tomorrow let's meet at 7 a.m. 6:15 on a holiday, quite impossible for us. So let's meet tomorrow. So tomorrow we say we are meeting from the data in the morning, then later we meet at what time? That